All right, a crowdfunding of real estate review for April 2021. Hi, I'm John McNeil, and this is the Invest Strong Network. Welcome. Crowdfunding of real estate is an excellent way for the average investor to invest in real estate without having to deal with the headaches of contractors and arranging financing, and when you own rental property, having to deal with tenants and collecting rents and evictions and repairs at 1 o'clock in the morning and things like that. Now, there are many crowdfunding sites out there, the more popular of which Fundrise, CrowdStreet, Peer Street, Diversity Fund, Realty Mogul, and the one that I use, Groundfloor, right? All right. Now, each one of these crowdfunding sites have a slightly different platform that they use in their crowdfunding ways, right? And Groundfloor, again, the one that I use, has a much more straightforward approach. So you put up the funds, right, which are combined with funds from other members of the crowd. Those funds are then used by Groundfloor and an agent that Groundfloor uses to acquire properties, develop the properties, and then sell the properties at a profit, of which you get a rate of return on said sold projects, right? All right. So been doing this since the fall of 2018. Well, what are the results? Okay, we'll have to break this down into two categories. First, we'll have the historic returns, right? These are the loans and projects that I have put money into, and they have come to full fruition, and what have been the rate of return on those. The second category are the projects that I am currently investing in, and what can I expect from those going forward. Okay, so first of all, a little background. Groundfloor grades the credit quality of their projects on a scale from A to G, A being the highest credit quality projects, to G being the most speculative. Now, my portfolio centers in the middling range, right? So of the 62 current projects that I am invested in, 9 are B-level projects, making up 15.69% of the overall portfolio. 46 are C-level projects, comprising some 78% of the overall portfolio, and 7 are D-level loans, representing 6.34% of the overall portfolio. Now, historically, what have the returns been on my projects? Okay, so let's go back to the fall of 2018, starting there. All right. Now, since then, I have invested in 83 loans, projects, with a grand total of $16,000 worth of Brother John funds, right? So these are pennies that I have personally put into the crowdfunding projects, and what they call new money, as it were, that I've put in. And what have the returns been? Well, gone something like this. Of the 83 projects that have come to completion, right, 44 of them have performed at the rate that Groundfloor had expected, right? The term and the rate that they expected. And the total return off of those 44 projects was 11.3%. Okay, pretty cool. I'll take it. 16 of the projects fall in what they call the workout category. So these are loan projects that did not meet the original deadlines and expectations, but they were, shall we say, extended for some period of time. They did, in fact, eventually go on to completion. They were, in fact, liquidated, and all investors were made whole with interest, right? Okay, so of those projects, the total return is 11.4%. Again, not bad at all. We'll take it. All right. Now, here's the killer. Of the 83 loan projects that have completed, 23 of them fell into default. And the total return off of the 23 that fell into default was a mere 3.3%. Now, that total return number dragged down the overall portfolio return. So historically, the total return for the complete fund, my projects, was 8.1%, right? With the amount of $1,806.64 being net proceeds to the brother man off of the original $16,000, right? Okay. Not bad by any stretch of the imagination, right? Not bad. But the 8.1% total return, I must admit, it's a bit disappointing. I was certainly hoping for a total return to be in the double-digit area. Low double digits, 10.5%, something in that area or more, right? No, it fell short of that. In fact, fell considerably short of that at 8.1%, right? Now, I still have the 62 loans out there, right? Still out there, still performing. Or are they? Well, here are the numbers. Of the 62 current projects that are under fund, the grand total amount is $17,340, of which 37 of the 62 loans are currently performing to the expectations that Groundfloor had originally set. And they expect a 10.4% return off of those projects. Okay. Now, 10 of the 62 loans that are currently out there are in the extended category. Now, these extensions lead me to believe that they have missed a certain goal, right? But they are still on the overall scale to completion, and all of the investors will be made whole with interest. Maybe not at the time that was expected, but sometime thereafter, right? And the expected rate of return on those projects is 10.9%. Okay. Now, here is where Groundfloor, in my opinion, is getting a little funny with the numbers. Okay. 15 of the 62 projects are currently listed as being late, i.e. delinquent, right? Yet, Groundfloor is still expecting a return of 10.4% off of those projects. Now, we've seen in the historical account that of the 23 loans that went into default from the first batch, the rate of return was only 3.3%. And I fully expect that the rate of return off of this current 15 will also be in the low single digit range, probably around 3%, right? So this whole business of a double digit return off of these late loans, I think is foolhardy, right? And I'm not quite sure why Groundfloor is doing that, but that's what they're saying. So I fully expect the total return on the 62 loans that are still out there will probably be in the, again, 8 to 8.5% range, right? So with that being the case, am I still a big fan of crowdfunding of real estate? Yes. Well, first of all, it's easy as pie, right? I mean, you examine the projects, you pick the ones that you feel comfortable with, you drop your funds in it, and for Groundfloor, the minimum to invest is only $10. So virtually anyone, can invest in their projects. And so the ease of investment is almost worth the lower rate of return, in my opinion, right? And also, although the funds are not as liquid as let's say a stock market REIT that you could also invest in, but there's a certain excitement of being involved in a flip, right? To see a project and this thing is, some of them are like disasters. And then at the end of the day, they're actually transformed into pretty beautiful properties. And then they go on the market and everyone makes a nice profit. There's a good feeling inside that you get from that, right? And so I'm still a fan of crowdfunding of real estate, but you are not going to get the grand slam home run total returns that you will on other projects or other investment types. And that's just a fact. These are much more stable, much more steady, but less than spectacular returns. All right. So those are my thoughts for this week. If you found this information informative, please hit that thumbs up button. Do it for the brother man. I'd appreciate it. Also, please let me know what have been your experiences in crowdfunding of real estate. I would love to hear, your investing experiences. And of course, subscribe. Please subscribe to Invest Strong. Thank you so much, friends, and good blessings.